Hi, good morning, everybody. Can you all hear me? Are we live? Thank you. Thanks ever so much for joining us today for the PSR's annual plan launch event. I'm Louis Myers from the PSR. Before we get started, and we have got quite a jam-packed agenda for you all, as you know, I do have a little bit of housekeeping for you. So, there are, as you know, a number of breakout sessions that will be happening throughout the course of the day, and you will find the details on the back of your badges. So have a look, and shortly, after the first panel session, this room will be divided, and you'll be able to find the room that you're supposed to be in. So that's the first thing. Also on the back of your cards is the QR code. So at the end of the event, you can provide us with as much feedback as you like about today's event, and also give us some good insights into what you might like to hear from us about next year. So please do fill in that questionnaire. That'd be really helpful. And finally, if you have any questions about what's going to be happening today, please look out for a member of the team with a blue lanyard, and we'll be happy to direct you to wherever you need to go. So thank you very much. I'm now going to hand over to Aidene Walsh, who is going to introduce the session. So thanks, everybody.
Morning, everyone. I'm Aidene Walsh, Chair of the Payment Systems Regulator, and it's great to see so many of you here today, and also welcome to everyone who's joined us online. So the PSR is now into the second year of its 5-year strategy, and it's really important for all of you to note that we are maintaining the strategy in support of the outcomes that the PSR is striving for, so that users are protected, there is effective competition in payments, and payment systems are efficient. We absolutely recognise that this is a pivotal year in terms of delivery of existing priorities, and Chris will touch upon this. And it's also important for us in preparing for future developments. And this is why the board approved a financial plan that will allow the PSR team to deliver against both of these strands in the coming year. It will also allow Chris to complete his organisational design by creating a supervisory team. This is a natural evolution in the PSR's progress to supervise the payment systems operators, Pay.UK, Link, Visa, MasterCard, and Finality in due course, and to do this in a way that makes sense for each firm. Given the pace of change with payments, it's really important that we anticipate and respond to developments on the horizon, adapting and evolving our approach and indeed strategy as necessary. It's also really important for the UK, for the PSR to appreciate where the UK sits in the international payments landscape, where what we have is best in class, and then what we can learn from best practice elsewhere in the world. We're seeing a large number of large technology firms investing in and exploring opportunities in payments, and new payment technologies coming to market, with Sterling Finality looking to be the world's first high-value regulated payment system based on distributed ledger technology. And of course, the UK government, the Bank of England and Treasury have recently set out proposals for a retail central bank digital currency. These are proposals that we are actively engaged with. All of this points to the importance of regularly talking to all of you and engaging in a two-way dialogue. This helps the PSR improve our understanding of payments markets, refine and improve our regulatory proposals, and understand where we should prioritise our efforts. Continuing to enhance how we engage right across payments remains an absolute priority for us. And today's event is, of course, one opportunity for us to do exactly that. Where we do not have direct responsibilities and powers, I also see that the PSR plays an important role in influencing across ecosystems, and that impacts payments in order to improve customer outcomes. A good example of that is our support and involvement in the government's fraud strategy. We are also currently considering what we need to do in respect of supporting efforts to enable better access to digital payments. It is a comprehensive and ambitious annual plan, and I hope you take from it confidence that the PSR is increasingly moving in an agile manner to meet its statutory objectives of innovation, competition, and ensuring payment systems consider the interests of end users. I am very much looking forward to hearing your input today and working with all of you as we continue our important work in furthering UK payment systems. Now I'd like to welcome Chris Hemsley, PSR's Managing Director, to the stage to say a few words. Thank you.
Good morning, and just to echo what Aidene said there, it's absolutely brilliant to be back and to be back in person. I've already had a number of really interesting conversations, and it's only about 9:10, so we're doing really well, so more of that later on. So payment systems genuinely underpin our increasingly digital lives. They support productivity, they have an impact on the vulnerable, and also on inclusion. The UK's payment systems processed over £95 trillion worth of payments in 2021, and the PSR has a crucial role in ensuring that they work well for people, for businesses, and wider society. We protect people from fraud, we promote competition, and we make sure that in a world of constantly evolving technology, payment systems support choice, so that everyone can make payments in ways that meet their needs. We're now covering a larger and more complex programme of work than ever before, both in terms of scale and scope. And guided by our 5-year strategy, we're delivering positive change. Our work on payment scams has already protected consumers from millions of pounds worth of fraud. And this year we're working hard so that we're ready to make the next step on the prevention and protection, to make sure that prevention and protection are a reality as soon as the legislation turns on the powers that we need. This has the potential to really transform the fight against fraud by putting incentives in place for everyone to act. And it is something that we're starting to see already in anticipation of these changes. Our proposals also put in place a system that will adapt over time and help us tackle fraud threats as they change and adapt. Our card market review as well is also delivering change for businesses. Firms across the country will benefit from greater transparency and the ability to shop around more easily for the services that they need in order to accept card payments. Now, all of this work is backed by our formal powers of direction and also as our role as a competition authority, which is why our ongoing work on monitoring and enforcement is important, and it helps raise standards of compliance. And here our enforcement work has seen us issue fines totalling more than £40 million, sending a very clear signal that will take decisive action where people break the rules that we oversee. We are also laying the foundations for ambitious and transformative change in future. This includes our work overseeing the delivery of the UK's new payment architecture. We're monitoring Pay.UK's procurement and delivery of a new payment system with enhanced functionality. This will be an important new infrastructure that will support innovation. It will support competition and allow for a more diverse range of modern payment options. The key milestones of the competitive tender are now complete, and we are now moving towards regulatory clearances, contract award, and delivery of that new system. Meanwhile, as co-chair of the Joint Regulatory Oversight Committee, we're working to see the full potential of open banking realised. As part of this, we have a crucial role in making sure that account-to-account retail payments bring opportunities for new services, to allow more convenient and efficient ways to pay. And you can see this in our commitment to taking forward more flexible ways of paying, particularly through our commitment to support variable recurring payments. This has real potential to give people more control over their bills, something that is so important during the current cost of living crisis. All this is part of a substantial programme of existing work that's making progress to the outcomes that we've set out in our strategy. And we also have to have an eye further into the future. Through data and intelligence gathering, we closely monitor issues that may affect our strategy, anticipating and responding to developments on the horizon. And over the next year, I want to build on the progress that we've made in terms of engaging in more and better ways with stakeholders right across the sector. Which is, of course, why events like today's are really important. Hearing from you helps inform our thinking. It makes sure that we've considered views from all stakeholders. It also helps us better to understand what is likely to happen next in payments. So the work that we all do really matters. We create the condition for we create the conditions for a healthy payments ecosystem that works for people and businesses right across the country. And I look forward to working with all of you to continue that vital work. And I really hope that you enjoy today's debates and discussions and the rest of the event. So to begin with that, and our first panel, particularly continuing that focus on the future, I'd like to welcome to the stage Natalie, Tony, Nelixa, and Mike. Thank you very much.
I think that my mic's not on, or can you hear me? You can, brilliant. Okay, well, good morning. Thank you very much to Chris and Aidene for the introduction. Good morning, everyone. I'm Natalie Timan, Head of Strategy and Intelligence here at the PSR. And this morning's first panel is focused on, as Chris said, what's on the horizon for payments. And I'm joined today by Tony Craddock from the Payments Association, Nelixa Devlukia from the Open Finance Association, and Mike Chambers from Northey Point. So a very exciting panel. But before we start the conversation, I wanted to take the opportunity to talk a little bit about the horizon scanning work we've been doing here at the PSR. So, as you know, the PSR has a vision of what good outcomes for payments users looks like, and our strategy sets out where we want payments to be in the future. It's a future where users have access to payment systems and services that meet their needs. It's also one where there is effective competition between payment systems, and those payment systems are efficient and commercially sustainable. And this means that we need to make sure that there are sufficient protections in place and that the incentives are also in the right places. Our strategy is very clear, and our annual plan, of course, sets out the projects that we want to do to deliver this strategy. However, as we've been hearing, and as you all know, the world is changing around us, and so we need to understand what's happening in payments and beyond, and the impact that this is having on both our current work and also the new projects that we might want to take on. Understanding how payments is evolving is key to realising our vision of the future, and our horizon scanning work is therefore absolutely vital to achieving our ambition. So just in a few years, we've seen a lot of changes in payments. As consumers, the way we make payments has changed. We've moved towards making more digital payments and away from cash. For some of us, our phones are replacing our purses and wallets. Actually, not for me personally, but I suspect for many, many of you in the room that's the case. Behind the scenes, the technologies supporting payments are developing at an extraordinary pace, with the growth of, in API-based access, for example, and the emergence of distributed ledger as a mainstream payments technology. And of course, a day doesn't go past when things like AI are in the news, and it will be interesting to see the impacts that they actually have on payments. And where we make and receive payments has also changed too, in areas like digital wallets, digital currencies, and programmable payments. And we're expecting, of course, to see even more change. There's a credible future, or perhaps we're already there, where virtual environments become a significant place to make payments. And for merchants, the way they take payments is also changing. You increasingly see card payment terminals allowing market stalls and sole traders to take card payments. And we've also seen the change online. There are more and more convenient ways to accept card payments online. And there's still plenty of opportunity to provide enhanced competition and choice for merchants, benefiting all of us as consumers, including through our own work on unlocking account-to-account payments. Just these examples show that, specifically in the area of payment services, there's been a lot of innovation. It's fast-moving. This makes it easier for us as consumers and easier for businesses. Where we believe there could be more innovation, however, is in the systems themselves, where issues such as infrastructure renewal, standards and coordination become particularly important. And it's why our role as regulator can be essential. We can use regulation to address these challenges and to support innovation and competition in payments, to drive those other wider changes in how we make and receive payments. So what does this mean we can expect? Well, I've already mentioned our work in driving account-to-account transactions as a new, reliable way of making retail purchases. And we're seeing more people making payments using open banking, and we're expecting that usage to grow. And improvements are being made through the MPA, which will enable more innovation, access, choice, and hopefully competition. And of course, there are new technologies out there as well that all have the potential to push the boundaries of what we understand payments should look and feel like. These opportunities aren't limited to what we might think of as traditional payment ecosystems. So think about Web 3.0 or the metaverse, which of course could affect where we make payments. I guess it remains to be seen how the technology will work for payments specifically. And we're also watching carefully how others outside of payments might move into this space, such as Twitter or TikTok, to name but two. And there are, of course, organisations which are already moving into the payment space, whose influence here could grow significantly. Think Apple or Google or Amazon or others. And of course, we know that the government is pushing hard for CBDC. So of course, these all present exciting opportunities. But while there are opportunities, we can also expect some risks alongside them. And that's why we're watching developments very carefully. We want there to be a thriving, competitive payments ecosystem that is delivering systems, products and services that meet a need. And by keeping an eye on future, it means we can be ready to adapt, where we can, any regulatory approaches to support a dynamic, competitive and innovative market. Our work in this space is key because by knowing what might be, we can identify and work with all stakeholders to understand the potential challenges and make sure there are no barriers to innovation, or at least that we reduce them as much as possible. And so that leads me very nicely to our first panel discussion to talk all things on the payments horizon with Tony, Nelixa and Mike. And in the panel session, I'd very much like to focus on three things. First of all, looking backwards, what's already happened in payments and what are the trends. Secondly, if you like, what's happening in the future. And thirdly, what are the bedrocks of payments that we can think about and what should the PSR be doing about it? So if I could open up, Mike, to you first with a question about what would you point to as the biggest changes we've had in the payments sector already?
Thanks, Natalie. It's difficult, isn't it, to think about the biggest challenges of over what period of time are we going to talk about? And as you look back, inevitably you look forward as well. But as we think about the biggest changes that we've seen, I was going to bring up sort of what I thought might be a genesis moment. And then I realised there were two genesis moments. The first was the introduction of a near real-time payment system here in the UK as far back as 2008. I'm a former CEO. I can see another former CEO of Faster Payments in the room as well. Through our custodianship of those systems, we provided a bedrock of a real-time payment system or near real-time payment system in the UK. Had that not been delivered, we wouldn't be able to do what we can do today in the payment space. So it's a long way back now, but it's the real bedrock of making sure that we can move money around effectively. And for those that are old enough, just remember how difficult it was to switch money between two bank accounts in the same institution, let alone across different institutions. But of course, they're the payment rails. And then, of course, we wouldn't be able to do this without our iPhone or our Android phone. We now have a bank in our pocket. We have a payments terminal in our pocket. And if you combine those two points together, I think those two Genesis moments have put us in a great pathway in terms of where we are today. And more recently, if we think about open banking, and open banking payments, we've all probably played with them. We've done a few. There were some great things done with HMRC. The 3 or 4 most awful payments and frictionful and worrisome payments I make every year to HMRC with corporation tax, VAT and personal tax. Open banking has transformed the confidence and the trust and the certainty I have in those payments. But of course, as we look back and look forward, as good as those payments are to HMRC in an open banking environment, they are not the TfL contactless moment in themselves. There is so much more to come in terms of the payment space. Similarly, we've seen that on the other side of the type of payment with variable recurring payments. We've seen a toe in the water with VRPs for me-to-me transactions. And yet, despite that, I still get a text from my bank telling me I'm £41.17 overdrawn and could I please fund my account, when they know I've got another account for which they could swap the money across. So we're at the cusp there of me-to-me payments, and we'll see more coming through with VRPs. And I think on that, if you take all those ingredients together, you form a direct debit sandwich called Direct Debit 3.0, which is direct debit, VRPs, and request to pay. So that's led us to a point where there is a growing trust and confidence in digital payments for most in society. And as we explore this further today, we'll be thinking about how that can become a reality for more people. But of course, it's not all good, is it? If we look at where we got to today, we know we've got embarrassing levels of payment fraud, APP fraud, here in this country. And we have to deal with that embarrassment and address that fraud vector. So open banking, we've got a lot of registered users. We want to make sure they become sticky users. We want to make sure they become habitual users. And that leads us to where I would summarise what we're on the cusp of. We're on the cusp of a nation of confident digital users, where for most transactions, digital works well if you want it to. So it's how we fill that gap and how we encourage those who are outside of that digital space to become digital enabled. We're on the cusp of providing real choice for people about who they pay, when they pay, and how they pay. And as I started then my little piece on the granddaddy of real-time payment systems across the world, Faster Payments, we're on the cusp of some payment rails in the new payment architecture, which will further reinforce the dependency of those payment rails and their relationship with open banking going forward.
Brilliant. Thank you, Mike. Lots in that. Tony, if I could turn to you and ask, what would you say is the next big thing, and how might this affect outcomes for users?
Thank you, Mike, as a formidable backdrop to this comment. So, who has seen The Invention of Lying? The Ricky Gervais film. It's very funny. It's written and performed with him in it. And at one stage, he refers his poor dying mother. Is concerned about what happens when she dies. And so he invents something called the Man in the Sky. And the Man in the Sky says to his mum, when you die, you'll have a mansion all of your own and all of your friends come and you can have a very happy time. And the good news was his mother died happy. The bad news, of course, is that the Man in the Sky was completely fabricated. So sadly today, I don't have my own Man in the Sky. I wish I did, but I have got almost as good, which is I've had some conversations with my members who have given me a sense of what's really important. And unfortunately, it's a long list, about 20 things. Distilling all of those things, I think I've resulted in two. They've been mentioned. You've got them in your strategy, Aidene, which is great. It's all to do with digital currencies and what that actually means. The big thing is that our world is going to change fundamentally, because no longer we'll be thinking about simply how we move really a small number of currencies around between various parties. We'll be looking at a whole multitude of different types of currency. And these programmable assets, tokenized assets, are going to require us to think differently and to think in a way that is going to challenge all of the fundamental thinking that we've already had so far to date. I think, you look at tokenized programmable money. I've been thinking to myself, trying to get my head around, if I have a digital token of an asset of one type or another, and I add an if-then to a simple if-then. So, for example, I'm investing in a green, environmentally sensitive investment fund. If I have green money, then I can make sure that there's an if-then attached to that token that ensures that that money definitely gets invested into green causes. Now, that confers some very interesting challenges about risk, obligation, liability, and responsibility that we haven't kind of got our heads around. We certainly don't have any rules or regulations for them because it doesn't really exist so far. And I think that's going to be most interesting. You overlay on top of that the fact that these payments could be done between machines. They could involve multiple parties across multiple jurisdictions. And it could be extended time frames. It could be a 25-year payment mechanism for ensuring I own my house. But in fact, it's contingent upon a number of other events, such as my dad dying. Well, goodness, this is suddenly very interesting. And actually, it's contracted, so I can't unravel this. So I've got to set this up correctly from the start. And then you add this other magical component called traceability, which, of course, if it's built on blockchain technology, you can see where the transaction has started, which parties it's going through and where it goes. Then two things happen. First of all, I can confer a huge amount of control to either the giver or the receiver, with all the incremental kind of commercial aspects attached to that. I can also imagine criminals going, whoopee-doops, this is a great playground, and I can do all sorts of fun things if I just insert a particular clause in a token that didn't otherwise exist. So the potential here is massive. It could absolutely put the payments industry even more centrally than it currently is in financial services. It could also increase the level of risk and fraud and theft, but also it has the potential for killing off fraud, killing off money laundering. We could be at a time when we don't need to worry about the contingent reimbursement guarantee because, provided we're sharing data and we have digital identity, we can get to a place where actually nobody would bother committing fraud because you can always find out where they are. So to me, that's a very exciting possibility. I think it's a tough gig for regulators, to be honest with you. It's an exciting opportunity for the industry, but also one that's going to threaten some of the fundamental things that we've built our whole ecosystem on so far. One of the things I think we'll be exploring a lot is whether stablecoins, digital currencies backed by assets, are going to be regulated in the same way which e-money is, and I think S-money is potentially the new e-money, stablecoin money is the new e-money, and I think that's what's going to be an interesting question. And the real challenge for regulators is how do they enable innovation at an incredible pace that involves new players that we haven't otherwise involved so far without opening the doors to the criminals. Was it ever thus, as a regulator? Was it ever thus?
I think it probably was, but it does feel like the pace of change is that much faster at the moment. Thank you, Tony. Nelixa, moving tack just very slightly, but keeping in mind all of the things that Tony and Mike mentioned, are there any of the changes that we've discussed earlier that you feel are likely to impact on what we've come to accept as bedrocks of payments?
Absolutely. I mean, Mike and Tony have covered a lot of ground. I think that if we pick up particularly on open banking, it meets the expectations of innovation and competition. It meets the expectations of consumer control. It meets the expectations of the regulator in promoting account-to-account payments. And if we look at what's in the JROC report, it's actually going to meet the expectations of well-functioning infrastructure. And it's obviously well-functioning infrastructure that we need in order to actually have trust in payments, to have people, have that reliability in payments, and absolutely to have that ability for firms to build the products and services that are going to provide the best user outcomes. And if we think about what's happening in the UK landscape, and we think about open banking, the JROT report actually said that it has the potential, I think it was 18 billion for the UK economy and end users. 18 billion. I mean, it's a huge figure, isn't it? And we look at the trajectory of where we're heading now. We're in a situation where, as Mike said, we're on the cusp. Open banking has got to where it is, but it has massive potential. Innovation, competition, UK PLC, the ability for us to actually take the knowledge and experience we've had and share that with the world. That's what we've done with open banking. And we're now at a stage where we have a roadmap. We have a 2-year plan that will set these foundations, move us forward, not only in respect of the infrastructure and that trust, but also in respect of a commercial model that will allow for competition, variable recurring payments, give consumers control. So it is this huge checklist that we now have of how we move forward within our open banking and then open finance and then smart data ecosystem. We've got a roadmap that gives us proposals for a legislative mandate. We've got a roadmap that gives us thinking and a foundation for a future entity following on from OBIE. The challenge we have as industry, and I think as regulators as well, is that there are, 29 work things that need to be delivered within that roadmap. So that is going to be incumbent on the regulators and industry to come together to deliver to those timelines. I think that's going to be challenging, but I think that within this room and within industry, we have the will to actually move this forward. We know that open banking account-to-account payments are the bedrock of a future payments ecosystem. I'm not saying they're going to replace cards. I'm not saying they're going to necessarily replace direct debits. But it's part of the evolution as we move to digital payments, as we move to choice, as we address consumer needs, and we think about that wider ecosystem of how consumers want to interact with financial services, how the technology can actually help them better manage their finances, of how it can in the future help them plan for their financial services future as well. If we put that wrapper around what we know today is open banking, which in the future should be open finance, and which if we think about what's in the DPDI bill will actually be smart data. And so I think that there is a lot for industry and regulators to deliver, but I think we are actually on a happy, if complex, but difficult path.
Great. Thank you, Nalixa. I would like to save some time for audience Q&A, but maybe if you'll allow me, I will ask one final question, and then I've just got some reflections. But if you had a magic wand, what would be the one thing you have on your wish list for the PSR to actually push for? And Mike, would you like to start with that?
I'd love to start with that that question. I had sort of 1.5 answers because they are connected, but the main answer sounds a little bit like a manifesto to me. But, in the role that a regulator plays, the role that the ecosystem plays, we need to be gunning for a nation of confident users of digital payments in an environment, an ecosystem where the fraudster doesn't prosper and where technology helps us and doesn't hinder us. And I think if we all work within that type of mandate, we'd make the payments world a better place. And from a regulator's point of view, it is a case of holding us to account as an industry when we don't deliver, but also creating an environment where rather than being compelled to do something, as an industry, we pull together to do the right thing. That was sort of the manifesto answer, a little bit more in the weeds. I don't know about you, but almost every day, I read a story in a paper or online about somebody that's been defrauded and a heart-wrenching story of something that somebody has gone through. We probably know some personal examples of that as well. And a little bit controversially, but every time I seem to dig a little bit deeper into those stories, at the heart of that story is the use of SMS and email in that payment chain. And if you look in those stories, it just seems to me that we've got to do something about the communication layers of a payment as well as the payment itself, and think about the payment as a whole. And my plea to the PSR, a little bit controversially maybe to some in the room, but let's upgrade pay by link to request to pay.
Brilliant, thank you. Tony, what would be your one thing?
So,
or one and a half.
one and a half. So he's not very popular, but he's very rich. Nick Storonsky. People will have read his commentary in the newspapers in the last few days, Times and the Telegraph. He's lamenting a scathing commentary on the state of the UK's fintech sector and how it's regulated. We know that he's trying to get a banking license with the PRA. Of course, he's unhappy. He's thinking this will help his cause. I'm not sure whether it will, but he was caught very, very critical of red tape, bureaucracy, and the ever tighter, and what the FCA refers to as more assertive approach to regulation. When he wrote about this, I thought, you know what? I had an uncomfortable ring of truth to it. And I've been in this industry for 20 years, and I see an increasingly tight and restrictive approach, funnily enough, not by the PSR, but particularly by the FCA. The difficulty is, it isn't just my experience and my views that suggest that post-Brexit we are weakening as a country. And I hate to say this, I'm no more proud than anybody in this room as we saw the King crowned at the weekend. But we've noted, for example, Paul Mason noticing that more than £1 trillion worth of investments have already fled the banking and insurance system for the European Union since Brexit. Paris overtook London as Europe's most valuable stock exchange. Momentum's ebbing away from the UK. More VC investment in London happened. Less investment happened in this quarter than this time last year, down by 79%. So the thing I want us to do is to look around us, and the thing I urge the PSR is to show some really clear leadership, please. I want leadership around. I want your proportionate and measured approach, which is fantastic. Accountability for the delivery of the roadmap that Lix has just mentioned, which is so critical to our future. But this leadership to support the industry in retaining the same quality of innovation and investment, to make sure that rather than doing what I see happening is a very slow strangling of our sector, that actually the FCA can do what the PSR is doing, which is, I think, a very enlightened approach to, for example, engaging with stakeholders as they are today.
Great, thank you, Tony. And Nalixa.
So Mike and Tony have, I think, articulated the sort of aspirational high-level wishes very well. I'm going to make mine very practical. We live in a very complex regulatory ecosystem, and there are lots of initiatives currently ongoing. There's delivery of JROP, there's DPDI, there's app scam fraud, there's MPA, and very high on my wish list, all of these align and are coordinated so that we deliver a very holistic ecosystem at the end of this, rather than continuing to have unnecessary friction and challenges.
Brilliant. Thank you very much. Before I do open up actually to the wider audience, maybe it's very difficult, but maybe I can try and actually sum up some of what I've heard. There's a lot packed in there, and it would be great actually in the lunch and over other periods to speak more on that. But I did hear a few common themes. I think I did hear a lot about that we're really in a pivotal moment in payments, which brings both opportunities and risks. We're very much moving to a digital society, and enabling digital users and digital currencies, and enabling that payments to be made without friction is really important. But as the PSR, we need to achieve some kind of balance, and that's a balance around enabling innovation and investment, and making sure that we still have trust and want to make sure that we are able to actually decrease fraud as the payments themselves evolve and transition to this more digital world. But with that, perhaps I can open up to audience Q&A. I think there should be some roving mics.
Hello, can you hear me, everybody? Yeah. So my name is Martin Kopak. I'm from Fair by Design. We exist to eliminate the poverty premium. That's the extra costs poor people pay for essential services. And I'm on Faith's panel later on. And now I'm going to preface my question by saying I'm an ex-regulator, so I love a bit of competition. I love a bit of innovation. You know, empowered consumers, driving the market, brilliant. But for the issues that the poorest in society face, often that's where innovation is least likely to happen because there's the least amount of profit to be made from them. And those are the areas which kind of trail behind. We had lots of conversations about the role of the regulator, huge role. Lots of talk about the role of industry, again, huge role. But often the most difficult questions involve a little bit of cross-subsidy between richer to poorer consumers, unfortunately. Any thoughts about how to tackle that? Often there is a need for social policy people to engage in this, and I know that's really awkward for regulators, but any thoughts from the panel on how do we make a bit more of a start on that?
Can I jump in quickly? The Access to Cash review, brilliant piece of work. There's very clear macroeconomic analysis that says that if you bring people with you, the collective benefits, a rising tide lifts all ships. To me, access to cash, I would love to have a world in which people who couldn't, either for various reasons, all sorts of reasons, access or use our modern traditional payment, digital payments, our modern digital payments methods don't have access to them because they prefer to budget in cash. And we've got to find a way of ensuring that the rest of the ecosystem supports that so that those people are brought with us. And that to me, financial inclusion is something we should take very, very, very seriously and have a responsibility as an industry for that.
Just to add, I absolutely agree, Tony, in terms of what you said around access to cash. I know Duncan, John are in the room, guys that are heavily involved in that financial inclusion and access to cash, others I'm sure as well. And I think that's really important. The only thing I would say is, whilst not losing sight of access to cash, it's making sure those folk who have to or choose to stay in that cash sphere, that we don't preserve cash for cash's sake and they get left behind. So where there is an opportunity to embrace digital, where there is an opportunity to do things differently, how do we provide those tools, whether it's financially providing it or through tariff or through education, whatever it might be, that folk aren't trapped in a cash cycle if they don't want to be, and can access internet services, can access utility bills on a fair platform in a fair way, things like request to pay versus a prepayment meter, that sort of stuff. So absolutely, Tony. But we have to remember that those we can bring or want to come or able to come on a digital journey, that where it meets their needs, because it's all about choice, isn't it? It's all about people being able to choose who they pay, when they pay, and how they pay.
I think, Martin, that was a really difficult and tricky question. I have to say that some of what you're touching upon sort of is outside of the remit of financial services. You know, when you talk about poverty premium, it's people paying more for their energy, it's people paying more for their services. I think that within the financial services ecosystem, there is a moral imperative to help address access to financial services, whether that's cash or digital. But then I think that when we have the tools at our disposal, like open banking, if people are digitally enabled, you know, and those are barriers that have to be addressed, again, separate to the actual financial services product, then there are products out there and use cases that can definitely help them actually better engage and have better financial outcomes.
Yeah. I really agree with everything that's said here. It would be quite interesting to see how CBDC affects the sort of social inclusion and those who want to use cash. Maybe I could just offer a slightly different perspective, and that, I mean, when we as a regulator think about competition, it's important that we take into account, if you like, vulnerable consumers, and that there is competition for those. So where you might see, competition perhaps. If it's possible to separate out different types of customer, and you might see competition or the greater competition for the more profitable consumers, that we do have an eye to what's happening to those vulnerable consumers and do try to ensure if there is competition that benefits certain users, that manages to trickle down to others and isn't discriminatory, if that makes sense. Thank you. Do we have other questions? I think we do.
Thank you. John Burns from Compliancy Services, like Martin, former regulator. And as a former regulator, something that Natalie mentioned, and Tony as well, about Natalie talking about the metaverse and the virtual world and payments in there, and Tony talking about multi-jurisdictions. One of the problems in the virtual world is, where is the service happening? What remit does the PSR or the FCA actually have to address an issue that's happening in the virtual world? How would you see that being addressed?
Well, wouldn't we all love a common regulatory platform across the whole planet? That would be cool. That would be really, but it's never going to happen, I don't think. I mean, Binance was not regulated in the UK because it wouldn't say where its money was kept, and probably rightly so. I think it's a huge question, John. I mean, who knows? Do you have a view?
Well, the one thing that my starting point with this, and obviously it's going to evolve, is it's going to depend on the company providing the financial service. And maybe that's where you have to look at where is that company based and then take it from there. But I mean, this is a whole new challenge that we're all going to see going forward.
But it's based in the metaverse. It's based in Web3 somewhere. I mean, who knows where it is?
I mean, what strikes me is that payments, if it's a UK consumer, the payment's still going to have to come probably from an account in the UK somewhere by a regulated entity. So should we be looking at actually managing and addressing those flows and stopping the payments going to somewhere that might be fraudulent or difficult on it, which is a difficult thing to do, but that's the only place I can see where you could actually do it.
What we need, John, we need a regulator in the metaverse. So I think I might set one up.
I'm not applying for it.
But I mean, in reality, in the absence of a regulator in the metaverse, which I like the idea, actually, this is an issue that regulators have faced with, for example, big tech. And I think coming together, coordinating, making sure that we, where we can, share information and start to develop processes and regulations together will be super helpful. And just that coordination and contact amongst international regulators in the payment space is becoming more and more important, just as it has been for example, for big tech. I think there was a question over there, if I'm not mistaken.
Thanks. Andrew K, transpac.com. Tony, I'd like to thank you for describing the nirvana of conditional payment. As a firm that runs conditional payment, otherwise known as escrow, I can confirm that it is game-changing and it will become ubiquitous and change the world. I just hope it's soon from my company's point of view. But Natalie, I wanted to address something you said, which is a theme that runs all the way through the current PSR output, which is that protection needs to be brought into bank transfers. At the moment, we've got a bank transfer being the only payment rail which is not subject to chargeback. And I believe that's critical to the UK economy. And the PSR's desire to remove that safety and make every payment rail subject to chargeback will have will cause significant damage to the UK payment system. In effect, the PSR is breaking the payment system because it wants to open up bank transfer to competition to help in its competition attempts against the card payment systems of Visa and MasterCard. In failing to do that, the PSR believes that it should open up bank transfer as an additional system, but it's going to break bank transfer by introducing cashback, introducing chargeback into bank transfers. Have you got any comments on that?
Well, I'm not sure that that's actually the case. As you mentioned, we are keen, of course, to open up the payment rails to competition, and that's important. But I don't think in doing so we're looking in any way to break the payment system.
I think there's a couple of dimensions here. I mean, bank-to-bank payment, the whole open banking thing needs a commercial model that's viable, and part of that's got to be compensation for consumers who have some sort of chargeback requirement. There's going to be something because without that, consumers won't trust it in the same way in which they do card to cards. No, they simply won't. They've proven that they're not. Mike?
No, I was looking at Natalie rather than trying to stop you in your flow, Tony. Look, as I ran direct debit for over a decade, and central to direct debit is a direct debit guarantee. It stood the test of time for over 50 years, and it was the one thing that made direct debit the success it was and the innovation and the growth we saw through the 70s and into the 80s. Now, that's ancient history, and I would not be a proponent of the current direct debit guarantee for other types of payments. But what I would say is that if we are going to use payment rails for making payments, we have to be able to protect those people sending the payment. So whether it's a consumer having taking money out of their account or money being sent from A to B, we need for maybe certain sorts of flavours of faster payments, maybe not every type of faster payment, but a form of consumer guarantee that underlies or protects the good and service that is either being transferred or procured or is subject to the fraud. So we need to provide that level. If we don't do that, I'm not sure we will see the success that we might see in account-to-account payments using faster payments rails or new payment architecture rails.
Thank you. Melissa, you wanted to
I think so. It's just worth highlighting that there is a particular account-to-account payment in open banking, which is when the payment is made to a merchant, where actually we've talked about fraud a lot, and obviously it's an industry issue, and it's an imperative for everybody to help work towards mitigating fraud across the ecosystem. But within open banking payments, where you have these payments going to merchants, you have a contractual relationship between the third-party payment provider, the TPP, and the merchant. The payment information is pre-populated for the account that money is going to. And therefore, the risk we have where we see app scam frauds and manipulation of payment data is actually not possible. And therefore, it's actually a mitigation to fraud to use open banking payments, particularly in this ecosystem where you want to pay a known merchant. And so, therefore, I think, we have to think about the different types of payments that were actually being conducted. Where are the risks? And then where do we need to put those protections in? We don't want to add unnecessary friction into payments and have a one-size-fits-all, because actually, we know that friction can be, a barrier to innovation and competition. So it's got to be the right risk-based approach that we put in place going forward.
I think that's absolutely right. And of course, protection and competition in many ways go hand in hand. For a user to actually switch systems and actually put pressure on for other systems to actually compete for them, they need to feel protected. We do need to tailor it, as Nelixa said, and think about the individual situations. We don't want to create friction, but in many ways they go hand in hand. They're not opposing each other at all.
We have an online question.
Oh, please.
Okay, so this is from one of our viewers online, Chris Hemsley, and he says, Chris talked about using VRP to help consumers with better ways to pay their bills, especially customers who are managing tight budgets. At the moment, this isn't possible due to the very narrow scope of VRPs. What needs to be done in order to unlock this important and low-risk use case?
Well, thanks, if I can just provide a little answer. Thanks, Chris. I know you tried to get to London. You weren't able to get to London today. I think what I would say is that, we've cut our teeth on me-to-me payments. It's given us an idea of how the thing might work. As we move out to more commercial VRPs, it's selecting some very careful and very appropriate user case or cases to trial our next steps on VRP. But in doing so, to create a framework, a common framework, rather than a series of different multilateral arrangements between all the players. So finding a way of coming together, getting a very simple framework to come together with all the same rules and the same understanding, and try it with a few safe case studies and see what happens.
which is what we have in the JROC report.
Yeah.
Absolutely. Great. I am being asked to not just wrap up, to actually stop. But I would just like to thank very much the panellists for all your input and insights. I hope that actually someone in my team has been taking very careful notes, and thank the audience for all your questions. Thank you so much for a very interesting session.
Thank you.
Thank you very much.
Thank you very much.